Hi, my name's Paul Meades, and if you're watching this video, it's probably because you've seen one of my blog articles relating to remuneration planning. I'm regularly asked about remuneration planning by clients. Last year, I put together a graph to explain some basics behind it. I had some great feedback, so I've updated this for the tax year ahead. Before I walk you through the numbers, it's very important to understand that remuneration planning is bespoke to each individual because people have different personal goals, they have different costs of living, they may have different forms of income like rental income, pensions, investment income, and you also have to consider national insurance contributions and corporation tax rates, particularly if you're in business. However, the basic starting point for all remuneration planning is this graph that I've put together. It shows the two tax years, 2018-19 and 19-20, so that you can see the changes in the rates from one year to the next. As you'll see, the personal allowance has now increased from $11,850 to $12,500. And that's where, in the UK, none of us have to pay any income tax. We then have a basic tax rate threshold and a higher rate threshold. You don't need me to repeat the numbers, as you can see them on screen. A couple of areas of really important items to point out. Firstly, this red section, which is the parent warning zone. That's when you start to lose your child benefit that you're receiving for your children. So if you're earning over £50,000 a year, you'll start to lose your child benefit at a rate of £1 for every £100 over that amount, therefore losing the whole 100% of your child benefit by the time you are earning £60,000. Now, it's important that you recognise that when you're deciding how much to pay yourself out of your company, and also to consider your spouse or partner's income if you're married or in a civil partnership. The second red area to consider is once you have an income over £100,000, and that's very important because you actually have an effective tax rate there of 60%. Most people don't actually realise that how much the tax goes up by. The blog articles you've seen me write before are always talking about trying to get your income just below on the borderline between the basic rate and the high rate. Or if you need to earn more money than that and you're going to be really needing to get towards the 100,000, then trying not to tip over that amount in any one tax year. I suggest you take some time to reflect on the figures and how they relate to your personal circumstances, and if you need support with tax efficient remuneration planning, please feel free to get in touch with either myself or a member of my team who will be more than happy to help you.